Hey everyone, and welcome to This Explainer. I am absolutely thrilled to guide you through today's topic because we're getting into the literal lifeblood of any successful business, cash management. We are going to master the cash book. Whether you're managing a local shop, looking into the mechanics of business studies, or just wanting to understand how money actually flows and is tracked in the real world, you are totally in the right place. We're going to break down the columns, demystify something called contra entries, and show you exactly how to take absolute control of your financial records. So here's our roadmap for today. We're taking a building blocks approach. We'll start with tracking your daily cash, move on to the two-column cash book, then add the bank column, crack the contra entry, and finally wrap it up with some real-world bookkeeping.
All right, let's jump right into Section 1, tracking your daily cash.
Before we look at any complex charts or accounting rules, let's just ground this in reality for a second. Every single business, big or small, has to keep an eye on the money coming in and the money going out every single day. Think about your own life. Have you ever bought something, maybe at a local market or a retail store, and the seller just gave you a discount? Like maybe the item was 20 bucks, but they let you have it for 18. We all love that feeling, right? But put yourself in the business owner's shoes for a minute. How do they officially record that? They only received $18 in physical cash, but they definitely need to remember that they gave up $2 to make the sale happen. This simple, everyday transaction, that's exactly why we need structured bookkeeping.
And that brings us to our foundation, the cash book. Basically, it's a primary record used to track all cash receipts, cash payments, and crucially, those discounts we just talked about. It's not just some rough notepad you scribble on. It is the official ledger where a business monitors its exact liquid assets. I mean, if a business loses track of its cash book, it literally loses track of its heartbeat.
Okay, moving right along to Section 2, the two-column cash book. To organize all this tracking into a proper, formal structure, we use what's called a two-column cash book. It gets its name because, well, it features exactly two amount columns on both the receiving side and the paying side. One column is strictly for the actual cash moving in or out, and the second column is dedicated specifically to discounts. By splitting them up like this, a business owner can instantly see exactly how much hard cash they've got and exactly how much money they've given away or saved through discounts. Let's actually construct one half of this cash book together so you can picture it. You always start with the date of the transaction. Next to that, you have the particulars. Now, that's really just a fancy bookkeeping word for the description of what happened, like sold goods to John. And then the stars of the show are two amount columns, discount and cash. So if John owed us 50 bucks, but we gave him a $5 discount, we'd write a 5 in the discount column and 45 in the cash column. It's brilliantly simple, really, and highly organized. Now, the totally crucial point here is understanding the two sides of the whole book. In accounting, the left side is the debit side that tracks money coming into the business. The right side is the credit side, tracking money going out. But pay close attention to how the discount behaves here. On the left, the debit side, we record discount allowed. That's a discount we gave out to a customer. On the right, the credit side, we record discount received, meaning a discount a supplier gave to us. Keeping these clearly separated on opposite sides of the book ensures the records perfectly match up with reality.
Let's level things up a bit in Section 3, adding the bank column. As businesses grow, trying to operate entirely in physical cash gets pretty impractical and dangerous, honestly. Let me ask you this. Do you keep all your money as physical cash stuffed under a mattress at home, or do you keep money in the bank as well? I'm guessing you use a bank, right? For security, to prevent theft, and just to easily manage larger payments. Well, businesses operate the exact same way. They have physical cash in the register, sure, but they also have funds sitting in a bank account. And they really need a way to track both of these at the same time without losing their minds. To solve this, we just expand our book. A three-column cash book simply adds a bank column to track bank transactions right alongside the cash and discounts. This is a total game changer. Instead of having one completely separate book for cash and another entirely separate book for the bank, the whole shebang is consolidated into one single master view. So, in this expanded layout, alongside your date, particulars, and discount, we now have cash and bank columns sitting right side by side. If a customer pays you with physical paper money, boom, it goes in the cash column. If they pay with a direct bank transfer or a check, it goes right next door into the bank column. A business owner can glance at this single page and instantly know their total liquid wealth across both their physical till and their bank accounts.
Now for the fun part. Section 4, cracking the contra entry. This right here is often where people studying business get tripped up, but if you just focus on the underlying logic, it makes perfect sense. So, what happens when money moves between our cash and bank columns? That is what we call a contra entry.
It happens when money is simply transferred between your cash in hand and your bank account, or vice versa. The money isn't coming from an outside customer, and it isn't going to an outside supplier. It's staying entirely within your business, just changing locations. And because it leaves one column and enters the other column within the exact same book, it has to be recorded on both sides of the cash book simultaneously. To avoid totally confusing yourself and accidentally double counting this money as new income, bookkeepers use a universal signal. Every single contra entry must be clearly marked with the letter C in the cash book, usually right next to the particulars. When an accountant looks at the ledger and sees that C, they immediately know, okay, this isn't a new sale or a new expense. This is literally just money moving from our left pocket to our right pocket. Let's walk through this step by step with a super common real-world example: depositing cash. Step 1, you take physical cash from your shop and deposit it into your bank. Step 2, you debit the bank column. Remember, debit means money is coming in, so the bank balance is increasing. Step 3, you credit the cash column. Credit means money is going out, so your physical cash balance is decreasing. And finally, step 4, you mark both of these entries on the left and right sides of your book with a C. You haven't made any new money, you've just shifted it. And that is the magic of the contra entry. Let's bring it all home with Section 5, Real-World Bookkeeping. We've covered the core mechanics, but let's zoom out and look at why these concepts literally form the foundation of global commerce. First, let's lock in our core vocabulary. These are the absolute must-know terms. Discount, which are the reductions allowed or received that we meticulously track. Bank, the secure column representing our digital or deposited funds. Contra entry, that two-sided transaction marked with a C when money shifts internally. And lastly, balance, the ultimate goal of this entire process, ensuring the total debits and credits match up perfectly so you know your exact financial standing. So what are the real-world benefits here? Why do managers and business owners rely so heavily on these three-column cash books? Well, first, it accurately tracks business savings and expenses from discounts. Honestly, if you don't track your discounts, your profit margins become a complete mystery. Second, it lets you manage cash and bank funds simultaneously on a single page, which saves a massive amount of administrative time. And third, and perhaps most importantly, it helps prevent theft. By strictly monitoring the flow of physical cash into bank deposits through those contra entries, any missing money becomes immediately obvious. It's basically a built-in security system. I'm going to leave you with this thought to ponder. We've just looked at how businesses meticulously track every single penny moving between their pockets and their vaults. But think about your own daily life. How do you balance your personal cash and bank columns? Like, do you know exactly how much physical cash you have on hand versus what's sitting in your checking account right now? Understanding the principles of the cash book isn't just about passing a business studies class. It's about mastering the flow of resources in your own life. Thanks for joining me in this explainer, and keep tracking those balances.